Property prices boom. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of Heise Says. Still working through my stein of coffee, and I thought we'd look at this article from news.com.au by James Hall. National Property Index smashes 16-year record with the fifth monthly increase based on CoreLogic data. I thought this would be an interesting piece to go through because I'm becoming more skeptical about everything I read from the property industry by the passing day. And we'll just jump to my blog. Now this is the says.heise.com.au blog. You can see here I've updated my front page to have recent articles. And here, I wrote an article, Fake Auction Clearance Rates Exposed. And I've been looking at this for a while now, based on some disgruntled people ringing me up and telling me that they're frustrated at the answers they're getting from Domain or from realestate.com with regards to the data that is coming out. And in this article I go through just the different videos and methodology I went through, and we looked at the data, and essentially we found that there is a discrepancy between the published auction clearance rates and the actual auction clearance rates when you data mine it and check it all, which they're not updating, and they have all the data themselves. Because surprisingly, the addresses of properties don't seem to change. So if a property was meant to have an auction, you didn't receive any updates, and then 2 days later it's for sale, what do you think's happening there? Maybe it's worth confirming what actually happened. So yes, please have a read of this article, watch the video I did on it, and share it far and wide, because we need to be skeptical of everything that is coming out of the media. I'm of the opinion now that, the housing sector needs to be pumped up in Australia because we don't have much else. I did a video this morning about the manufacturing industry. It's in decline again. I've got another one that I've already done that I'll release later today about the construction building approvals. They are down. I've got job advertisements are down. Here, building approvals are down. Foreign investment is significantly down, guys. Wage growth, that's going stellar. Car sales, even those are down. So everyone is, people are pinning their hopes on this stuff that's coming out of these. Property's going up, property's going good. I wouldn't mind. I would love it if property were to shoot up. I made money on my house doing absolutely nothing, which is a joke. Because my house, I think the value is only in the land. House needs to be demolished and removed. It's a labor of love. But I'm trying to find the fundamentals behind all of this that can sustain this lift. Is it just the dead cat bounce? Is the property just bouncing up from a more continued decline? So let's have a look at this article and let me know your opinions in the comments, guys. National Property Index smashes 16-year record with the fifth monthly increase. The property downturn is history, with new figures showing the dramatic and record-breaking rise in property prices across the country. Have you seen a record-breaking rise in property prices across the country? I know we've got people leaving comments going, I've been trying to sell my house for months, not had one person going through. Maybe there's this rise in one part of the economy, one sector of the housing. So the National Property Index has tipped into positive territory in the final month of the year after recording its fifth consecutive monthly increase and its largest monthly jump in more than 16 years. See, here's the thing. Do you honestly think they'll cross-check this with the actual data from state revenue? Values in Sydney and Melbourne continue to lead the surge, where prices rose in November by 2.7% and 2.2% respectively, shaking off the downturn that weighed on property prices until the May federal election. Hobart jumped 2.3%, followed by Canberra's 1.6% lift, while Brisbane, Adelaide and Perth gained between 0.8 and 0.4% over the month. Darwin was the only capital to lose ground, slipping 1.2%. So we can see here the change in dwelling values monthly, quarterly and annually. Sydney, it's up 1.6%. Total return 5.3. Now the median value, is $840,000 dollars. I mean, I couldn't even think about getting a loan that big for a house. Damn, that's just insane. When you look at how much they cost to build these things, a lot of them are glorified speckies with a bunch of flammable cladding and foam stuck all on the outside with a bit of render whacked on it. They're not innovative. Melbourne, 2.2% in a month, 6.4%, 2.2, total return 5.5, 666,000. Brisbane 0.8, 1.8, we're down 0.5, total return 4.1%, 497,000 here in Brisbane. So Brisbane's generally more affordable than Sydney. But then I've got a mate who works in the IT industry. He's complaining he may have to move to Sydney for work. That's the thing. This work opportunities are different in the different cities, so understandably the property prices would reflect that. But still, Adelaide, and the total return for the year is 4.1%, 433. Perth down 3.7% at 437. See, that's interesting. If you look at some of the properties and listings that people have, you can get pretty low or pretty dramatic cuts in Perth. Hobart, total return 9.6%, 474,000. I mean, that's crazy. Is that because people are selling out of Sydney and Melbourne and going for a green change down to Hobart? What's it in Lonnie? I mean, I don't mind. The only thing with Tasmania is it's so bloody cold. I've had some fantastic times down there. I went for a student conference, guys. The States of Mind conference, and we went from Launceston to Hobart by bus. And I remember, because I came from QUT, there's a group of international students, or these Asian girls. They actually flew down to Hobart and they all caught a taxi all the way to Launceston. And the taxi driver loved them. They did it as an adventure, So Darwin, annually down 10%, total return negative 3.4% at 388. Canberra, annual at 3, 7.6, total return 611. So the combined capitals, everything's up. Wow, it must be so good. Index result at November 30th, 2019. Now, does reality reflect this? Okay, because the data that's used here with the auction clearance rates, what they're advocating is accurate, what so many articles are pushed on. We've got evidence here. You can download the data that we got. You can download the Excel file from my website, guys. You don't have to take my word for it, and have a look at it. It was Fresh Canvas. The team there, they did the data collection for us. You can download it and have a look. Where is it? Here you go. I've compressed it in a zip file to get it up on my WordPress. You can download it, check it yourself. And then you need to question, okay, if this data here from another organization, REA, is doing the same thing, if that's questionable, how much can we trust here? How much can we trust here? And is there going to be any... See, this is the thing with journalism too. It's not like academic writing. And I'm not starting to realize that I'm aware of that, but it's becoming more and more evident. Let's see if there's a counter argument that appears in this piece. Okay, let's see. Let me know in the comments before I go any further if you think there will be or if there won't. Okay. The national index rise of 1.7% over the month was enough to lift its annual figures to a gain of 0.1%, with CoreLogic head of research Tim Lawless attributing the turnaround to several positive market factors. The synergy of a 75 basis point rate cut from the RBA, a loosening in loan serviceability policy from APRA, and the removal of uncertainty around taxation reform following the federal election outcome are central to this recovery. Okay, how is that sustainable to the economy? Where is this flowing through to other parts of the economy that will create employment? Okay, guys, building approvals, which is related to construction, down, guys, 8.1%. And you'll see my video on that later today, or I might release it before this one. We'll see how I feel. But where are we seeing this? He's saying the same thing over and over again. But what's fundamentally behind the rest of it? Are people just going to be doing that and buying up more real estate? What happens when arrears rates, which are going up significantly, what happens when people can't pay anymore? Let me know. Guys, what do you think will happen? Additionally, we're seeing advertised stock levels persistently low, creating a sense of urgency in the market as buyer demand picks up. So here's the real reason. It's a shortage of supply. Or I would also argue perhaps housing is going up at a greater extent because people are shy from units and apartments. And we also have foreign money coming in from Hong Kong, although I don't know if that's significant. It's not going to be anywhere near the levels that we had in the past. I'll jump over here to bring up that chart if you're not familiar with it. I mean, there you go. You can see the black line is the percentage of building approvals that were from foreign investment. It's insanely high during the boom. There's also the prospect that interest rates are likely to fall further over the coming months, and an improvement in housing affordability following the recent downturn are other factors supporting a lift in value. A rise in value was extending across the country, but the surge was concentrated to premium markets, Mr. Lawless said. Well, there you go. If you're not in a premium market, if you're in a normal house, that's very little differentiation from the other ones in the suburb, do you think you're going to see the same huge climbs? Sydney and Melbourne's top quartiles were up 7.4% and 8.1% respectively over the 3 months, about twice that of each city's lowest quartiles. Well, there you go. It's in the upper end of the market, guys. That's all it is. Maybe people aren't putting their houses on the market if they don't have to. Maybe it's only people in these upper ends that need to move their stock, or they want this. The smart money is getting out of housing. Could that be what we're seeing here? Well, other money's coming in, so I guess not. The stronger performance across the higher value end of the market can likely be attributed to a combination of values falling more in this sector during the downturn, as well as recent adjustments to serviceability rules which have boosted borrowing capacity, Mr. Lawless said. The recovery is expected to spread from the higher end of town, however. As housing values become less affordable in these high-end markets, demand is likely to ripple outwards to the more affordable areas, Mr. Lawless said. Realestate.com.au chief economist Nerida Conisby said the rise in premium suburbs was typical of an early cycle. We generally see people flocking to the best suburbs first, she told news.com.au. But here's the question. How do they know what an early cycle is compared to a dead cat bounce? Have they experienced one? Do they have living memory of the last recession Australia had to have? We've seen it show up in search for quite some time. When we look at suburbs people are looking at, they tend to be very expensive suburbs, which is quite different to when the market was really strong. So this isn't, I wouldn't say this isn't a boom, this is an increase in certain markets. This is the thing, and I've heard Martin North talk about this as well. It's how they're looking at the data. They're taking all the suburbs and they're squishing it all together and say this is the Sydney rise. When you need to look at it at a more granular level, look at different suburbs and say how that's increasing. These huge houses are shooting up and that lifts up the median for everyone else. But the crappy houses, the normal houses, aren't moving. Mr. Lawless said he doubted the high pace of gains could be sustained. Oh, there you go. Considering wages and household income growth remains low, economic conditions are losing momentum, and housing affordability is once again worsening from an already high base in the largest cities, there's likely to be some headwinds in maintaining such a fast recovery, he said. Additionally, the market is yet to be tested on higher supply levels. Advertised listing numbers have remained seasonally low throughout spring due to low new listing numbers and an increased rate of absorption as buyers' demands lift. With selling conditions looking very strong, there is a high probability that listing numbers will show a material lift through the first quarter of 2020, which will test the depth of the market and likely ease some of the urgency that is contributing to higher prices. BIS Oxford Economics Executive Chairman Robert Mello said Australians should be cautious when analysing the strong recent data from the leading property research firms. Okay, let's see why he's saying that. We would stress that all the indicators highlighting that sale volumes are still down significantly on the levels of a year ago, and we expect quarterly price growth to slow significantly over the second half of this financial year to June 2020 as listings increase, he said. However, by June 2020, median detached house prices in Sydney are expected to be up nearly 14% on June quarter 2019 and be only less than 4% below the peak level achieved in June 2017. While in Melbourne, detached median house prices are expected to be up 12% over the year to June 2020 and be only 2% of the March quarter 2018. Let's have a look at another organisation that likes to make predictions of increases, let's say wages, from the Reserve Bank of Australia, their wage forecasts. So, anytime anyone makes a prediction of this, I'm completely sceptical of it. I know past performance doesn't indicate future success. Do you think past failure, repeated failure, indicates a high propensity for future failure? Maybe it can go both ways. What do you think? So I'll jump back to the article. Looking at Tuesday's RBA decision, the Reserve Bank of Australia board is due to meet tomorrow, but Ms. Kniesby expects the official rate to remain at 0.7% after being slashed 3 times in 2019. I think they will just wait and see what happens through the summer and then pick it up again in February to see how things have changed, she said. 3 interest rate cuts haven't exactly put a rocket up the economy, but I think for now they'll just have to watch and wait. Ms. Kniesby does share the view of most property and economic commentators who believe another cut is likely in the first half of 2020. The federal budget in May will be really interesting. It's highly likely we'll see tax cuts brought forward and more aggressive infrastructure projects planned, she said. There will be other measures looking at to try and boost economic growth, not just relying on monetary policy to try and push forward the economy. Further rate cuts in the next year could help the property market fight off economic headwinds, Mr. Lawless said. Mortgage rates are already at the lowest level since at least the 1950s, which is one of the main factors supporting increased market activity. If rates do move lower, no doubt policymakers will be watching for any triggers that could provoke a policy response limiting household credit. Previous rounds of macro-prudential have had an immediate slowing effect on market activity. Is the dramatic rise in valuation a good thing? Comment below. So it's good to see there is at least, well, there's no challenge. Well, yes, there is. I'd say there is a challenging to this potential growth. You have to be questioning it, and it's that it's in the high levels of the market, but it isn't clearly articulated that the granularity of the data isn't shown. It'd be interesting to see this on a suburban level. You know, what's the price movements on a suburb by suburb level? That would really be interesting. What do you think, guys? Do you think these predictions of price growths next year is going to hold true? What are the fundamentals that are driving it up? Let me know what you think, guys. Please like, share and subscribe to the channel. If you enjoy the content, we have a Patreon where you can make a donation. We also have PayPal and Ethereum where you can make a donation as well, and Amazon and eBay affiliate links. Take care, guys. Have a great day, and I will see you later. Bye for now.